Hello and welcome back everyone. I'm CA Harsh Mehta and today we'll learn about what is a fixed deposit. I'm sure you must have heard this term before from your dad, mom, granddad or someone in the family because this is the most oldest and the most trusted investment product available in the market. So let's understand today what exactly is a fixed deposit. Now before starting, if you come across words like time deposit or term deposit, they are nothing but another name for the fixed deposits. Now let's start by first understanding which all institutions issue a fixed deposit. So let's understand who issues it. Before that, it is important to know that depending on the credit risk of the institution, they offer different interest rates on their fixed deposits. So this is one of the important point to consider before selecting a FD. So let's start with it. So these are the issuers that offer fixed deposits to their customers. The first one are the banks, banks like SBI, HDFC, and other banks. The second one is small and medium banks. One example of it is AU Small Finance Bank. The third one is the non-banking financial company or NBFC as we know it. One of the NBFCs is Bajaj Finserv that offers fixed deposits. The next one is the housing finance company. One example of housing finance company is LIC Housing Finance Limited. And the last one are the cooperative banks. One of the examples is Shamrao Vittal Cooperative Bank, and you have multiple banks in and around your area. So these are the issuers who offer fixed deposits to their customers. So let us understand what is the FD and how does it function. So let's assume that there is a person who wants to open a FD. So he visits a bank and says that I want to open a FD. Bank says that deposit a sum of money, what it could be 100 rupees, 1,000, 10,000, or whatever sum with the bank. And the bank against that money will issue a FD certificate to the person stating the terms of the FD. So let's assume that we have a FD certificate issued by the bank over here. So let's assume that the term offered in the FD certificate is 5 years. And the interest offered by the bank is 7%. And let's assume the payout to be annual. Payout can be quarterly, semi-annually, and annually, and even a cumulative payout. So for this example, we'll consider that the payout is annually. So let's understand what will be the cash flows with these terms of FD. So as at 0 year, that is on the date of investment, there will be a cash outflow of rupees 100 which you will pay to the bank for opening FD. Now at the end of 1 year, at first year, we'll have a interest receipt of rupees 7, that is 7% on a 100 rupee investment. So we'll have a cash inflow of rupees 7. And this cash inflow will continue till the fifth year in the same manner. Now at the end of the fifth year, we'll also get our investment back because this was the amount that we paid to the bank to yield a return. And the term of the FD was 5 years, right? So after 5 years, the bank will return us the initial deposit that we made with the bank. So we'll have a rupees 100 back with us. So just in the numerical terms, what the amount we get back in total would amount to approximately 35 rupees. So we'll get 35 rupees return over the period of 5 years from this FD. So this is how a FD instrument works. Now let's understand what all terms of FD are available in the market to choose from. The first one is the quarterly interest. Under quarterly return, you will get interest every 3 months. That is, you will be paid interest 4 times a year. Next one is the semi-annually. As the name suggests, you will get interest twice a year. That is every 6 months on your FD. Under annually, you will get only once whole of the interest amount. That is every 12 months. Now the last one is the cumulative interest. Under cumulative interest, whole of the interest amount will be paid on the last date of your FD. That is the end of the tenure. So the whole of the interest is payable when the tenure of the FD ends. So these are the options that you can choose from based on what your cash flow requirements are in the future. Now, let's discuss some of the advantages offered by fixed deposits. So, the very first one is that it is safe. Now, how is it safe? A sum of up to rupees 5 lakhs is guaranteed by DICGC, that is the government organization. What does that mean? It means that uh, FD, saving bank, and current account balance all combined is guaranteed up to rupees 5 lakhs. That is, if the institution fails to return your amount, the DICGC will return you the amount up to rupees 5 lakhs. So this is a safe bet. The second one is the higher interest. Now, fixed deposits offer higher interest as compared to saving bank deposits. So, it is beneficial to create a FD instead of keeping the funds idle in a saving bank account. The third one is loan against FD. So, as soon as you open a FD, you are eligible for a loan against your FD up to 80 or 90% of your FD amount. So, depending on the institution that is giving you the loan. So, it is a liquid instrument also that you can earn your interest and simultaneously you can take a loan if you want it, if you are in need of temporary funds. The fourth one is the known cash flow. So, at the point of investment, you know that what will be the cash flows in future that you will yield from FD. So, at that point, you can plan all your needs and all your cash flow requirements in future and match it to the fixed deposit cash flows that you will yield in future. So, that is one of the great advantages of this product. So, and the fifth one is the longer tenure and higher interest rate. So, as the longer the tenure you will opt for the FD, higher the interest rates the bank will offer you. Now, let's discuss some of the disadvantages. The very first one and the most prominent one is the lock-in. Once you invest in FD, your funds are parked there for minimum period of that tenure. Say, example, if it's 5 years FD, then your funds are locked in for 5 years there. Uh, so that results into non-liquidity of funds in a FD scenario. The second one is the penalty. Let's say that you have to withdraw the funds, you are in dire need of the funds and you have to withdraw. So you'll have to pay a penalty for pre-withdrawal. Let's say if the tenure was 5 years and you after 3 years you need funds and you say that I want to withdraw, the bank will say that you have to pay a penalty for premature closure of your FD. So that is one of the disadvantages in FD. Third one is the same interest rates. So let's take an example that you invested 7% today for a 5 years tenure. So that 7% interest rate would be fixed for all the 5 years of the FD. So let's say after 2 years, if the FD offered by bank is for 8%, then you have opportunity loss of 1% because you will be getting 7% as compared to a person who is investing on that date for new FD. So that is one of the disadvantages that is in FD. Now let's discuss some of the types of FD. The very first one is a standard FD. Standard FD is pretty much everything what we have discussed up till now about FDs, which have a fixed tenure, fixed rate of interest, fixed payout dates, and so forth. Let's come to the second one, the recurring FD. What is the recurring FD? Recurring FD is simply a type of FD wherein you select a particular period, usually a month. So what happens is when you select a recurring FD from a bank on a monthly basis, a fixed amount could be deducted from your bank account every month, which will be parked into a fixed deposit. So let's say if you have selected 1,000 rupees as a recurring number. So 1,000 rupees every month will be deducted from your saving bank's account and will be transferred to your fixed deposit account. So that this keeps on building your fixed deposit every month. This is a very handy opportunity for a salaried employee who receives their salary every month. So you can select a particular date on the very next day of his salary receipt so that he keeps on building his investments continuously. The third one is flexi fixed deposit. Flexi fixed deposits offers you a flexible tenure and flexible deposit dates and also allows premature withdrawals from your fixed deposits. So I'll discuss more about it separately because it's a big concept and it's a very interesting one. Let's come to the next one. The next one is senior citizen FD. So, senior citizen FD is a normal FD, but the interest rates offered on a senior citizen FD are higher as compared to a normal FD. To be eligible, you will have to be 60 years or above for opening a senior citizen FD. So, it is more beneficial to open a FD in your parents' or grandparents' name so that you earn a higher interest on the same amount of purpose. The next one is the cumulative FD. Under cumulative FD, you don't take interest payments every year. Instead, you select to take all of the interest payments as at the last date of the tenure. So why would anyone do that? Because the interest that is credited to your account also earns interest. So if you're not in the need of cash flows, you can let that interest earn interest and grow compoundedly under cumulative FD. The last one is a tax saving FD. Again, that is a normal FD, but for a tenure of 5 years or more. So if you open an FD for 5 years or more, you are eligible for a deduction under Section 80C. One catch here is that you are not allowed to make a premature withdrawal or take a loan against that FD. If you do so in the tenure of 5 years, the investment would be disallowed and you'll have to pay taxes on that sum again. So this sums up our topic, basics of fixed deposits. I hope you can now understand what exactly is a fixed deposit and how it works. So catch you in next video. Thanks.